Good evening, everyone. Today is Tuesday, March the 11th, and it's Technical Tuesday today. So we're going to talk about the new Dow Theory. I'll explain what the Dow Theory is, and then I'll show you what I mean by the new Dow Theory here in a minute. As always, I'm not a financial advisor. Anything I say here is for educational purposes only, and past performance does not guarantee future results. So always keep that in mind. Nothing that I say should be a recommendation to buy or sell anything. So let's look at what happened. As you can see, the market bias chart is still going down. Went down again a little bit today. The market was down today. Actually looked like it actually did get into the green. I'll show you that in a minute. I thought it might end green today. I told a friend of mine earlier this morning that I thought it might end green, but didn't quite make it today. Still heading down. So let's take a look at each of these before I get into the Technical Tuesday part of this. S&P, right there, came back up, tried to make a run, but still ended lower than yesterday. But it looks like it's kind of waning. Looks like the momentum is subsiding a little bit. The volume was down slightly, still above average, but down slightly from yesterday. And still below the 200-day, unfortunately. Below all the key moving averages, actually. So got a lot of work to do to get back into the positive. NASDAQ 100 probably looks very similar. Actually, came back even more. So that's a spinning top candle, which is often a reversal, or sometimes a reversal. It has to get confirmation from tomorrow. So we can't say that that's a reversal yet. We have to wait for confirmation, but looks like it could be. Let's see what happened with Bitcoin. Bitcoin actually had a good day today. Bitcoin was up, you see right there. Really nice rally on Bitcoin. So it might be the first one to break the trend from all the other ones. So it is heading higher today. Let's take a look real quick at the bottom finder and see what that's telling us, if anything. So we'll look at the NASDAQ 100. And someone pointed something out, which I have not changed it on here, but I probably will. And that is the VIX that I'm showing. The VIX is actually the VIX for the S&P. There is one for the NASDAQ 100. It's called VXN. And actually, I can change it right now. I can show for those that use stock charts. It's very easy, right down here. Price, and below the panel below the main one, I'm using a histogram. Color is lime, height is 1, opacity is half. Got a horizontal line, a few horizontal lines. So you can actually put multiple horizontal lines just on one single command in here, which is nice. But I'm changing the VIX to VXN. So let's go up, and there's the VIX. When I hit enter, oops, that's not what I wanted. Oh, it added a new one. Oh, interesting. Okay, so I'll take the VIX out. Let's take VIX out of here and leave VXN in. There's what it looks like. A little bit higher than the VIX was. So anyway, yeah, that's came down slightly today, but only very slightly. So let's look at each of these. 20-day is now below 20%. So as I mentioned yesterday, I like to see that around 10%. So it's getting there. The 50, I like to see around 20%. That's not quite there yet. It's at 29. And the 200 is at 43. I'd like to see that down around 30. So they're getting there. They're getting closer to a bottom. And with that spinning top candle, might even be signaling, we'll see what happens tomorrow. We need that confirmation, might even be signaling that a bottom is very close. Put call ratio is still heading lower, however. So I really want to see that go up into, I want to see more bearish, people more bearish. So I want that, I want to have more puts. And as the market has been going down, it's actually, I'm seeing more calls coming in. So I'd say we're getting closer, but not quite there yet. I'm going to look at something else. I've got a number of different ways to look at the put call ratio on here. So, right, let me see, let me find it. Lots of charts on here. So here's the put call ratio. Here's the 5-day, which is basically what I use there. So you can see right here, the 5-day really has not increased. I like to see that moving up. I want to see more puts. And the S&P is still going down. So as the S&P goes down, people aren't buying more puts. They're still, buying the dip. So that's implying to me that if we do get a rally, it probably won't last. Let's look at the 10-day. So the 10-day right here is basically just going sideways. Went up a little bit slightly, but just going sideways. I like to see it way up here, like we had back here when we're at bottoms. But that's not happening yet. So I'd say we're getting there, but I think any rally, and I do expect to see a rally, markets don't go down, straight down. They do rally at some point. I'm going to bring up, before I jump into the Technical Tuesday, I want to make sure to bring up this chart because it's going to be, I'm going to reference this. That's this one here, which I showed before. So what you can see, first of all, is this, I haven't updated this, so this is from yesterday. So we would have a little spinning top right here now, but I would expect this to go up and then go back down again. Probably go up to hit this really clear, what was support now is resistance. I talked about that being the line in the sand before, and now it is clearly resistance. So this arrow should really be right at that 58.50 level. That's probably where things will go to before it reverses back down. That's likely to be close to where the 21-day is as well by the time it gets there. So that's what I'm expecting. But keep that chart in mind, or keep this whole down here. Keep this accumulation, markup phase, distribution phase. Before I jump into the Technical Tuesday, I want to check one more thing because someone has been asking me about a symbol and I keep forgetting to show it, and it's Ford. So for that person that keeps asking me about Ford, here we go. So Ford actually does not look great. Over here is the weekly. You can see it tried to rally up here to 13, got rejected, came all the way back down because of earnings. Had earnings again here, didn't do much. Had earnings again right here on February 5th. Came back up to a reversion to the mean on the weekly, but you can see on the daily, it was trying to make a rally and then pull back, reversion to the mean again. And then today, sold off today. It actually had been hanging in there pretty well with the rest of the market going down, but it's got a lot of overhead resistance. It's really going to have to do a lot. It's probably going to get, if it does make a rally, try to rally, it'll probably get rejected here at about 1050, come back down, maybe try again. But Ford is just, for me, just looks like dead money for a while. Big, huge volume today too on the downtrend. So sorry for not looking at that earlier, but Ford is not looking great. So let's look real quick at the dashboard. S&P, you can see right there, that's where it, here's the intraday. You can see right there where it went up and actually was positive very briefly, right around 3 o'clock. And then came right back down again. Actually, the last 30 minutes, last 10 minutes went down even more from there. So that's not good. Daily view, continuing to go down on the S&P. Tried to have a little bit of a rally today. Weekly view, same thing. It's now below the 50 week or the 200 day. So 200 day is right here. That's the same as the 50 week down here. So it's now below that. And if it stays there, maybe the end of this week, by Friday, we might be getting into an inverse ETF on the S&P. But what I really like to see is a bounce. I really would like to see it bounce back up close to the 21. I think it's going to get rejected there. And then would be a good opportunity to enter the inverse ETFs. All right, let's go back to the dashboard again. So bonds, 20-year basically flat, 10-year went up today. US dollar went down today. Commodities, gold did well. Gold was up. Oil was up slightly. Gasoline up slightly. Crypto, Bitcoin, as I mentioned before, had a nice day. Bitcoin was really down in the morning, but it came all the way back, came back basically to the high from yesterday. So it had a nice run for the day. If you look down here, the sectors, you can see the technology actually was at the top, even though they're all red, but technology was the best performing, which again was good. That might be rotation in the short term back into aggressive areas. Discretionary was in the middle, and the communication services was down in the bottom. Materials, energy, financials, utilities is the most defensive, and then staples is the next one down here, and real estate. So they're kind of in the middle of the pack, and you can see the number of declining versus advancers. Energy and materials and technology had the best days today. Real estate had the worst. And over here, these are the companies that from the NASDAQ 100 that reported in the last month. If you can see this little chart, there's Broadcom kind of going sideways. Costco missed, looks like they definitely went down, missed by 2.25% over there. MongoDB had a nice day today, trying to recover, but is down. Marvell down. Zscaler, okay. CrowdStrike trying to come back today. So some of the raw stores doesn't look good. Monster Beverage actually is hanging in there in a down market. Warner Brothers pulling back. All right, so the one over here that's interesting is in the industry groups is renewable energy. And I'm going to go over here. It was number 2 in the top 10. And renewable energy over here on the website, on the charts page, these are all the industry groups. And renewable energy is right here. If you click on the little square, you get the stocks. So Next Tracker was the best performer today. And it actually has been performing really well, even as the market has been selling off. So that's a testament to this group. This group on its own actually has been doing fairly well. And these are the ones just for today. First Solar right there, but only 2 of them really have good technical scores. But if we go back for a week, let's see what we find for 1 week. Solar Edge, these are the best performers. Next Tracker here again for the week, up 4%. Let's go back for 1 month. Solar Edge for the month, up 20% in a month. Plug Power, up 3% for the month. Next Tracker is actually down for the month. So it looks like it might be recovering, maybe to make a comeback. Let's take a look at the chart on that. So there's today. So definitely you can see it's above the 21 day. This is where I like to buy. A strong stock coming back, pulling up, even in a weak market. So this looks like a pretty strong performer today. And all of the momentum indicators are starting to move higher. So it looks like it might be recovering. This might be a good time to get into that one. I'm going to see about doing that tomorrow. One person asked me why I don't do the daily scan anymore. Well, it's because the market's going down. I'm not going to do a scan, run a scan for bullish stocks, jump into one just because it looks good, and just have it reversed because the whole market's going down. And it will be stopped out for a loss almost immediately. So it's better just to do nothing, sit in cash. As you can see here on the charts page, this is a quote from Willie O'Neill from Investors Business Daily. 27% of the stock's movement directly tied to its industry, another 12% directly tied to its sector. Therefore, half of the stock's move is due to the strength of the respective group that it's in. And if the whole market's going down, then most of these are going to be going down as well, which you can see. All right. So, um, one last thing on the dashboard is we can take a look at the best performers in the top 10. This one here, this is a Chinese stock, I believe. I can just tell by the gaps. That's what I call a gap happy chart, but doing really well today, up 14%. But the rest of these really aren't looking that great. If we look at the worst performers for the day, and I'll go back one, see if there's anything of interest. Paychex. Paychex is one that somebody asked about before, and Paychex was in the worst bottom 20, bottom 10, bottom 20. And let's look at the chart itself, and you can see a big down day today. This is a good example of what I've talked about with the shooting star candle. That is a failed breakout and a reversal candle. When it's at the top of an uptrend and you get a candle like that, you usually have to have confirmation from the next day, but we definitely have it now. But my usual reaction is to either just sell or put a stop right at the bottom of the open of that particular candle. So this opened at 153.48. The low was 153.34. I would have put a stop right at 153. Today it opened at 154 and immediately went down. So if I look at this on a 10-minute chart, you can see right there, opened right up here, opened right there, and just sold off right from the open. I would have been stopped out immediately right there. Just continued to go down, tried to make a little recovery, and then went down again the last 10 minutes. So not looking good for Paychex. Let's go one more back, see if there's anything of interest in here. Abbott Labs. Okay, McDonald's, Uber. All right, so now let's go to Technical Tuesday. Let's talk about the new Dow Theory. So first of all, what is Dow Theory? So if you click on this little button right up here, it says the new Dow Theory. For those that are not subscribers, this will work for you. It will take you over and explain part of the Dow Theory, the most important part that I'm going to look at. But you can also click here to learn more about what the Dow Theory is. So this will take you to Investopedia. And basically, it's a financial theory that says the market is in an uptrend if one of its averages, industrials or transports, advances above a previous high and is accompanied or followed by a similar advance in another average. So according to Dow Theory, Dow is the one that came up with the Dow Industrials, of course, and the Transportation Index back in 1900, roughly around that time. And at that point, what he noticed was if the industrials, the producers of goods, are going up, then the transports usually go up as well if the market is in a bullish trend. And the transports are the ones that deliver the goods that are produced by the industrials. So it kind of makes sense. So it's a technical framework that kind of predicts the upward trend or basically confirms the upward trend. So in the old Dow theory, it basically was using the industrials and the transportation index, and they should both be going up together. If one goes up like industrials and the other goes down in the same time frame, then it is a non-confirming indicator that implies that the market is probably ready to roll over. So here are the components of Dow theory. The market discounts everything, basically operating on the efficient market hypotheses. There are three primary kinds of market trends. Primary trends, hopefully you will recognize this. It's these right here. This is Dow theory. So what I've been showing you in the past basically comes from Charles Dow. That is his theory. So in a bull market, you have accumulation phase, then public participation, or what I call the markup phase, And then the excess phase is when everybody is in. And then during a bear market, you have the distribution phase, which I have been talking about for 2 months now, that we have been in a distribution phase right up here. So this is all part of Dow theory. And then there's a public participation where it starts to go down and everybody's selling. So that's the markdown, what I call the markdown phase. Then there's the panic selling phase at the bottom, where everybody is selling, or all the retail investors usually are selling out. And that's when the accumulation phase for professionals, that's when they are buying. Next is, and this is the one we're going to look at, indices must confirm each other. So this is what I just described. The industrials and transportation back in Dow's day need to be moving at the same time. Volume should confirm the trend, and then trends persist until a clear reversal occurs. So this is what I've talked about, talking about a character change, where it changes from lower lows and lower highs to higher lows and higher highs. I've talked about that here many times, about a character change. That's also part of Dow theory. So this is all Dow theory. So how does this work? How can you use this on the website? So you click on that link. We're going to focus on tenet number 4. Indices must confirm each other. And for Dow, it was the industrials and transportation. Well, I put that chart right on here. So this will be updated every day now. So what you can see is back here, and you have to look at the same time frame. So the vertical blue lines are the same time frames. I have the industrials and transportation next to each other. So industrials, you can see, sold off, and then it came back and made it back to the same previous high. It actually is a double top right there, but it's at equal point right there. Looking at the vertical blue lines, if you look at the same vertical blue lines on the transportation index was not confirming the uptrend here on industrials. That is the original Dow theory, or what I'm calling the old Dow theory. All right, but now this worked back then because basically transportations essentially were the railroads. The railroads are primarily what transported all of the products that were produced by the industrials. However, today is a very different world. Today is more of a digital world. So I have created what I call the new Dow theory, and it uses these 3 components. And if any one of these looks like this, in other words, non-confirming indexes, one of them is going up while the other one's going down, then it gives you a warning that the market may be getting ready to roll over. But if all 3 of them are confirming that, then it's pretty accurate that the market's ready to roll over. So let's look at each of these. Now, for non-subscribers to the website, you won't be able to see these charts. I'm going to show them to you what they look like today, but I will update them every day. For subscribers, you'll be able to see each of these charts. And you'll see when you click on one of these, it will highlight the one that we're looking at. So let's start with equal weight NASDAQ 100 versus equal weight S&P. So that's basically aggressive stocks. I'm making them equal weight because I don't want it overweighted with the Magnificent 7 or 8. I'm going to compare equal weight on both of these. So again, if the NASDAQ 100 is going up, making new highs, then the S&P should be as well. Well, let's see what's happened. So there's, and you can see it's highlighted the one that we're looking at. Here's the equal weight NASDAQ over here. The vertical lines are the same time frames. And so it made a new high right here in February, from December to February. Again, over here from December to February. Made a new high on the NASDAQ 100, equal weight, but the S&P did not confirm it. S&P made a new low, a lower high. Higher high on this side, lower high on this side. So that by itself, and this was in mid-February when that confirmed, when we hit this high right here. So now let's look at the next one. This is the cap weighted. Now we are weighting the NASDAQ 100 versus the semiconductor group. Semiconductors should be the strongest group within the NASDAQ 100. So they should be leading the NASDAQ 100 higher. Let's see what's happened. All right, so the NASDAQ 100 made a new high right here, about the same time frame in February. However, that same time frame, the semiconductors made a lower high. So semiconductors were this was non-confirming the trend. So this was the warning sign right here that the market likely was going to start heading lower, and it actually did. Basically the next day is when it started heading down. And you can look at the momentum indicators down here. You can even look at the squeeze component here on the NASDAQ 100. It was in a squeeze right back here, but the semiconductors were not confirming. They were at a lower point. So the squeeze was giving you an indication that it probably is going to fire to the downside, which is exactly what it did. Now you notice that both of these have a spinning top candle today. So and again, we have to wait for confirmation. If you draw an imaginary line across the tops right here, that's what it needs to get above in order to break out. All right, the last one to look at is cap-weighted communication services versus the internet group. So this internet group is Netflix, and primarily Netflix and Google. So if communication services are going higher, the internet group is the one that should be leading them higher. And let's see if that's the case. So here's the communication services on the left-hand side, same time frame again. Now in this case, it's a very more compact time frame. So it's hitting a new high right here, again, about the middle of February. But at that same time, when this was hitting higher highs, the internet group was hitting lower highs. And that was just before all of this started to roll over. Now, again, both of them have spinning top candles. Interestingly, the internet group ended higher than it opened. So it closed higher than it opened. That's what creates the white one. And on the communication services, it closed lower than it opened. But they both went up and down and ended pretty much near where they started. You'll also notice the volume through this whole period. When this was happening, right after it was happening, actually the volume over here was low, where the volume of the downtrend of the volume over here was higher than this. So let's look at the volume on the semiconductor one. So here we've got, so volume was lower in this case on the semiconductors as they came down to a lower point. And the equal weighted indexes, we had a little bit higher volume on the uptrend, much higher volume on the downtrend. So those are all confirming that the market was ready to roll over. Now, probably might be too late for this to be useful right now, but it also can be used to identify whether we've hit a bottom or not. So we want to watch the ones that should be leading and see if they actually do lead us back out of it. So semiconductor should lead back out, and the internet group should lead us back out. Well, we'll see. These charts will be updated every day. So anyone that has a subscription to the website can go here at the end of the day, roughly sometime between 4 and 5, let's call it, and see what the status of these look like. Start comparing one to the other. So that is Dow Theory. Again, for those that want to study it more, you can just click on the new Dow Theory and then click on this button here and read all about it on Investopedia. All right, that's it for today. Thanks for watching. Please like and subscribe. We're getting close to 1,000. Let's get this channel over 1,000. That would be really pretty cool if we could do that. But I really appreciate everyone watching. I appreciate all the comments and the symbols that you ask about. Let me know if there's anything you want me to look at tomorrow, and we'll see what happens with the market, see if it will confirm those spinning tops that we saw today. All right, thanks everyone. Thanks for watching, and be safe. I will talk to you tomorrow.